One of the reasons why many people strive to learn technical analysis is because it is much easier than learning fundamental analysis. In order to be able to fundamentally evaluate a particular security, it could take years, if not decades, of training in this industry. Technical analysis, however, relies on pattern recognitions and simple tools which helps us take a decision which is generally in the direction of the market. One such tool is the moving average crossover. And here I have selected the moving average crossover for 20 period and 50 period and set them on the hourly chart of the Nifty 50. In our continuation, we will learn how to use this information to plan for the next day's trade. One of the most important things that the students must know is that we are only discussing a theoretical plan for the purpose of exploring the various aspects of an indicator. The indicator that I have selected today is the MA cross. So the objective of this exercise is to use this indicator in conjunction with the price action and to assess how we can make various inferences from simply applying one indicator at a time. Now logically, when we zoom into the price action, we notice that the price action or the movement that is leading is that of a death crossover, which is indicated by this cross here. The death crossover of course indicates that the shorter moving average, that is the 20 period moving average, is trading below the longer period moving average, that's the 50-hour moving average. We know that the 20 period moving average is essentially capturing the closing price of the last 20 hours of trade session. And we also know that the 50 period moving average is capturing the closing price of the last 50 hours of trade session. And given that the 20 is trading lower than the 50, it means that the recent price is closing below the longer term price. And this is the technical traders interpretation or manner of inference that if the recent price is closing below the longer term price, then the trend must be downwards. Therefore, a death crossover and an increasing difference in distance between the 20 and the 50 period moving averages is the indication that many traders use to infer if a security is trending downward. Once we have understood that the security is trending downward, then the trader uses the price action only to plan trades in the direction of the trend, which is, in this case, it will be on the short side. And whenever we are planning to sell a security, the point at which we receive the maximum risk adjusted returns, so that is the point of maximized or maximum risk adjusted returns, is the point at which we would like to take our decision. Now, how do we arrive at that point? One of the axioms of trading a short side in the market is to sell the rise. That is, the trader will use the information of the death crossover downward sloping moving averages on the hourly charts to take a sell the rise decision within the scope of the hourly charts, which means since our assessment is happening on the hourly charts, everything we discuss is only applicable for one day. That is, the assessment made today on a Monday evening will only be applicable for tomorrow, that is Tuesday. And at the end of day on Tuesday, the trader will have to repeat the process of analysis to make a plan on Wednesday. Day traders who refuse to make a plan or try to make a plan on the fly, that is while the market is trading, are highly vulnerable to making very silly mistakes which could result in an earlier closure of their career. And like I said in my previous video, that the objective of day trading should not be to become rich, extremely rich, stand alone through the process of day trading. Because really, in order to gain wealth, we have to scale a process, and the scaling of the process is more important. In other words, before scaling, the exposure to the process is more important, and the frequently changing trends and volatility on the hourly chart gives the trader a lot of exposure before they end up committing serious amount of money to their business of trading. Now, whether this price action manifested itself in the hourly or in the monthly, the plan would essentially be the same, but we are only using this in the hourly in order to apply it for the scope of the hourly, which is going to be one day. Now, since we want to sell the rise, the day trader has to learn how to wait for the rise. And in general, when the market is trending, which how do we know if it is trending? We will simply add an indicator called ADX and observe if the value is above 25. Here you can see that the ADX is trading at 45 and has been discussed earlier that if ADX is greater than 25, then the market is trending. And if the market is trending, we are going to long options, which means either buy a CE or buy a PE, which in this case is only going to be a PE because we have identified that the trend is downwards. With this information, the only thing that remains to be is where do we enter and where do we exit. There are many technical indicators and formulas which allow a trader to take an informed decision. Today, we will be using moving averages only in order to determine this. So as has been discussed earlier, that whenever a security is trending, the previous moving averages, that is the 20 and the 50, will act as a support. So I will add this here. If the security is trending, then the 20-50 MAs will act as a support or a resistance. Similarly, if not trending, that is, if it is ranging, then the 20-50 moving averages are not reliable and can be ignored. So I will simply write here, can be ignored. In other words, the decision that we are going to take today based on the price action that is in front of us is first of all only applicable for tomorrow, and secondly is only applicable because of the specific nature of the chart as we see it, that is a death crossover, downward sloping moving averages along with an ADX which is trading above 25 indicating a strong trend. Now the question is, where if we understand that because it is trending, therefore the 20-50 moving averages will act as a support or a resistance, therefore we can already see that for the current market price, which is at 2219, we can see that first resistance, that is R1, is working out to be as 22,275, and the second resistance R2 is working out to be as 22,535. In other words, that what this indicates is that the trader who is planning to sell the market is going to use these two values in order to enter on the sell side, 22,275 and 22,535. Given that the current market closing is approximately 22,120, we are looking at a gap up or an up move of at least 150 points during the day for one to at least initiate 1 unit of sell. Further, we can see that the next resistance is almost 415 points from the current market price. Given that the market is so far away from its critical supports, the trader has to see from this chart that it is important to learn how to wait. Even though we know that the security is trending downwards on the hourly chart and therefore the plan for the next day should be a sell, a trader has to learn to wait for the levels as they come in order to sell. And sell what? The answer is we are going to sell via buying the put. Why? Because we have identified that it is trending. But the question is buying which put? So my answer has always been that buy the option that is equal to your SL. And there are many reasons for this. First of all, buying an option which is equal to your SL forces you to define an SL, because without this definition you simply do not know what strike price to trade. So it forces the definition of a hard SL, which is an essential good practice for any trader. Secondly, it forces you to be in the money. And the prices of an ITM option are far more reliable and predictable than deep OTM options. And therefore, you are more likely to get a very fair settlement price as compared to an OTM option, which could show a huge spread, causing you unnecessary losses. So the question is, we have identified now that from the current market price, we need an at least 150 point up move or a 400 point up move in order to justify a sell position on the market. Will this happen tomorrow? If this does not happen tomorrow, there is absolutely no question of the trader selling. In other words, the following prices are possible at the open. The first one is that it is a flat negative opening. In such a case, the trader will take no action. The second one is that it is a flat positive open. And even in such a case, the trader will continue to take no action and wait for the levels to come. The third case is a gap negative open. Now, a gap negative opening will mean certain no action. That's because even though the security is trending on the downside, the fact that it is creating a lower low cannot invite a fresh position on the short. The only point of playing the fresh position on the short will be a lower top. So a gap negative will again force no action. A gap positive will likely force action provided it is a gap of at least 150 points. If this is not happening, then it is very difficult to imagine a situation where a trader needs to punch the order at 9:15 in the morning. In other words, if trading activity has to also happen in the day, it is most likely going to happen on the sell side, and the market could take a lot of time till before it reaches its ultimate destination of 400 odd points. But still, it is our job as a trader to plan for the next day so that no up move or no down move comes to us as a surprise. So imagine a scenario in which we know that our ultimate point of entry or exit, our ultimate point of entry is going to be 22,535, which means beyond this, the market will no longer be bearish strong for sure. In fact, it could even change its trend into a range. Therefore, we will use this 22,535 as our reference for SL. Therefore, we are using 22,535 as a reference for our SL. And whenever you use a reference for an SL, we have to factor for volatility. And there are many tools to measure volatility. My favorite tool is the ATR, which in this case we will note is approximately 80 odd points. We will see here it is 82 points to be more specific. So here I will write ATR, which is roughly, I will just make it 83 points or round it up to 85 points. Now 22,535 plus 85 will give us an answer of 22,620, which is going to be our SL on the spot levels. And as you have seen that I have mentioned that always take the option which is equal to our SL and go in the money. In other words, we are likely to trade 22,650 PE with a SL of 30 points, which is the delta, which is the intrinsic value of the stock, which is the intrinsic value, plus whatever time value is applicable for the contract you trade, because the trader has the possibility of trading 22,650 on the weekly as well as on the monthly, and both of them will have a different time value. In other words, factoring the intrinsic value and the time value from our spot SL will give us the ultimate SL for the security that we are choosing. And with this, our trade plan becomes slightly more streamlined. I will remove these indicators here and I will add them here. So this has given us, this is just for your reference, and I will just change the font and make it black so it is visible more clearly. And for now I will also hide the moving averages so this is visible slightly better. So this here now becomes very clear what is going to be our next day of action. I can literally go and just mark the horizontal lines where I am going to act. So this is going to be a red line because I am going to short here. This is 22,275. This is 22,535, and we can see that at this point the market would really come even facing a gap resistance, and it is expected that the market should struggle or suffer here. But in the odd case, the market doesn't suffer here and it continues its up move either on the same day or a day after that and moves up all the way till 22,620, and this time I will mark it as a green, or maybe I will mark it as blue. indicating that at this point I will cover the short position loss. Now, does technical analysis work? It works if we say that the meaning of work is to give us a good trade plan. So technical analysis definitely allows us to give a good trade plan. You may note that we have not factored any of the fundamental changes that might happen from today's closing to tomorrow's morning open. We are making a plan based on the price, and in the plan, inherent to the plan, is the assumption that the plan will fail, and the duration of the plan and the scope of the plan. With this information, a trader can plan well in advance. How much are they risking, under what circumstances will they be called into the market, and when they have to exit. But the impulsive trader will not be able to control. And at 9:30 in the morning or 9:20 in the morning, at the first slight rise, nowhere close to the resistance, they might initiate a sell. And this will maybe be profitable, maybe, but in the long run, it is very hard to imagine that someone can just sell something anywhere and make money. Similarly, the impulsive trader might try to counter trend trade, that is, use the price action in order to take a bet that perhaps this low of 22,000 is the ultimate low of the market and therefore I will use it to buy. Buying a security which is structurally in a downtrend on the time frame of your analysis is a blunder which will be punished by the market, if not now, in the future. I am very confident about it. Like I mentioned even in the previous video, if you are keen on buying, simply buy in the time frame which allows you to buy. Do not force your opinion of buying the market on a time frame where there is a clear sell. This time frame is only suggesting sell on the rise, wait for the rise because the price is far. If it doesn't rise fast enough, quickly enough, that is, there is no point if the market moves 150 points by the time 2:30 in the afternoon arrives, because you will have less than 1 hour to take the trade. So it is very critical that the market has to gap up or open up with a huge positivity, rise up, run straight into this gap zone which is marked here, for us to be confident of beginning to initiate sell. Of course, we have seen 20. I have plotted the 20 moving average below. This is not to create a confusion, but rather by the time you create a system around this behavior will become automatic and you will start enqueuing these orders in your broker's platform mechanically. Till that time, I hope that this method of using discretion and technical analysis to make a plan which does not rely on the prediction of the market might be of some use to you and in your process of learning technical analysis. For more details on the prospect of studying technical analysis, I encourage you to visit the link in the description below. Thank you for your time.